This show is brought to you by Beco Dairy Automation. You have tuned in to the Agribusiness Dairyman News Hour magazine, your 1 hour all dairy connection. We call it the Dairyman source for news, ideas, information, and technology, mixed with a double dose of current market conditions. The what, the why, and the how things influence the amount of money dairy producers receive for their daily milk deliveries. We offer this daily news hour magazine as a catalyst for long-term dairy producer sustainability. We invite every dairy producer in America to get their daily dose of what can be done and what they can do to achieve and maintain profitability on their farms. $22 for 36 months is our goal. We advocate there is a way forward. We invite dairy producers to come listen, learn, and participate. This is a no-complaint zone. We talk solutions. So get out your pen and paper. And now, here's your host of the Agribusiness Dairyman News Hour magazine, Mr. Tom Van Nortwick, owner of Agribusiness Publications, publisher and editor of the Agribusiness Dairyman magazine.
It is Wednesday, the 23rd of March, 2016. A beautiful spring day in California. The wind has been up a little bit, kind of a spring blow, but not real hard, but more than normal, which keeps temperatures cool on a sunny day here in California, and we're grateful for the weather because it's brought us some rain. Not much rain and snow over the weekend with this last weather front that came through, but nevertheless better than things have been in years past. So grateful we are. Good morning to everyone that might be listening in or that will listen in at a later time. This is the Agribusiness Dairyman News Hour magazine, your 1 hour all dairy connection, and our responsibility, as we see it, is to provide as much news and information as may be possible in our effort to help dairy producers find and maintain profitable pricing for their milk. Sustainability really is kind of a key word these days. I was with clients yesterday in the water world, and those are big issues in California, and everyone knows there's still a lot of work to do to provide sustainability for agriculture in California. There's a mentality afoot for quite some time that would just as soon see agriculture gone in California, and yet it is that fuel that drives a huge engine, and we're lucky enough to be able to have the ability here. I say that loosely because it's not me or even us, it's you guys, it's the producers, it's the farmers who can grow hundreds of different crops here in this state as long as we can put water to it. This is not the Garden of Eden, but almost. As long as you can turn the water on, it'll grow. And so we get to have a part in that, and a segment of that huge effort is dairy. And 1,350 approximately dairy producers here in the state of California make about 20% of the milk nationwide. So our home base is fairly secure in dairy for now, but not at pay prices below the cost of production as they are today. The news not good again today, as we see the cold storage report came out yesterday afternoon, and we're talking about some very serious levels of butter inventories, hugely different from just January and February of 2016, and the numbers are just staggering. 25, 35%. Where did that? Okay. Let's see. U.S. cold storage butter stocks at 235 million pounds is 23% up versus January 2016, 32% up versus February 15. Okay, so things were falling a year ago because inventories were high, milk production high, demand low, and now because of all of the milk needing to be stored in a storable form, can't keep it liquid, only for a couple weeks. Otherwise, it's got to be processed into barrels, blocks of cheese, dry powder, butter. Well, we've done a good job. We got a lot. 23% ahead of January 2 months ago, 32% ahead of February a year ago. So holy cow. Then on the other end of that, under the listing powder keg, inventories at Mengniu, M-E-N-G-N-I-U. I'd figure out how to pronounce it. It's somewhere in China, I guess. Likely of milk powder are still high in the billions of yuan. And when we look at this chart they've given us, it's unbelievable how high their stored inventories are even in China. In the 4 billion, is that right? Prices of baby formula have risen recently while supply has fallen. Imagine that. Prices go up when supply is falling. Oh wow, that's certainly good news. That still works. Supply and demand does determine most of what happens in the dairy industry now. And of course, you have to also look at how the high supply versus low demand impacts who. And unfortunately, it only impacts, quite frankly, although, the processor's got to store all this too. They haven't sold it. They've invested money. You've invested money. Everyone's invested money to get that stuff into storage, and that don't make any money until something gets sold. There's another news flash for everybody. In the news, however, this morning, California processors during the week ending 3/18 sold 16.4 million pounds of non-fat dry milk at 74.43 cents per pound, down 4.42 cents versus the week prior. Now, the 74.43, about half to, in fact, a good price for powder would be somewhere in the 180 range, is where it needs to be to provide sustainability for dairy producers. Another article, change by Walmart would lead to the loss of 100 million gallons of very low-margin private label fluid milk volume. That may be in response to their announcement to build that facility in Indiana yesterday or earlier in the week. This is why Dean Food shares dropped. Okay, let's see if we can get this read without getting any pop-ups in our system today. Walmart said it will build a dairy processing plant in Indiana, so it does stem from that. Private label milk, to supply private label milk to about 600 stores, pertaining business with some suppliers in the retailer's sole foray into food processing in the United States. The move, announced by Walmart on Friday, but not widely reported by media till Tuesday, helped spark a 12% slide in shares of Dean's Foods, one of the suppliers of milk to the affected stores. We should call Dean's. I got an idea for Dean Foods. In securities filing on Tuesday, Dean Foods said the change by Walmart would lead to the loss of 100 million gallons of very low-margin private label fluid milk volume from in late 2017. It said it did not expect any impact on the supply of its own national brands and would not be material. Let me see where that material. It would not be material on its results. Whatever that phrase means, that's silly. Walmart confirmed that Dean Foods would continue to supply milk for its great value and Members Mark private label white and chocolate milk to other Walmart supermarkets and Sam Club membership-based wholesale stores. The retailing giant is the largest grocer in the United States with more than 5,000 locations. The move comes with Walmart's profits weighed down by costs to increase wages and invest in its e-commerce operations. The retailer is also facing tough competition from Kroger and other national and regional grocery chains, and has recently ratcheted up pressure on suppliers to help it lower costs. This is a smart investment that enables us to aggressively manage costs, keep prices low for our customers, and remain competitive with the majority of major grocery chains already bottling their own, said spokesman John Forrest Ailes. Walmart said it would build a more than 250,000 square foot milk processing plant in Fort Wayne, Indiana, creating more than 200 jobs. Due to come online in the summer of 2017, the plant will supply milk to stores in Indiana, Illinois, Michigan, Ohio, and northern Kentucky. Eliminating intermediary suppliers would likely give Walmart greater control over input costs and more closely align it with other grocery chains like Kroger and Texas-based HEB that have already set up their own processing plants. The shift also dovetails with Walmart's strategy of boosting its private brand offerings as a way to better compete on price, although the company said it did not have any plans for additional milk or food processing plants. Okay, so everybody is doing everything they can to improve efficiencies. There's no doubt about it, and in doing so, of course, it causes change. In other news, the world milk market will expand by 2.3% a year. Okay, in 2020, from 406 liters in 14 to 206 billion, I should say, liters, 406, excuse me. So it's going to go from 406 to 465 by 2020, 2.3% a year, though. Okay, can everyone say 2.3% a year? Not 4.6 Wisconsin, not 10.7 Colorado, not 6.5 Indiana, but 2.3. That's if everything's perfect. And right now it ain't. Production reduction provides long-term sustainability. The supplier of milk is in charge of the power. For dairy companies, China used to be a land of milk and honey. Now there is too little demand and too much supply. Article will cover that. Saputo, Canada's largest dairy, to shut down 3 plants. Fonterra, getting back into the global market slightly. Fonterra, the long-term fundamentals for global dairy are positive, with demand expected to increase by 2.2 or 3% per year. Okay, that's if everything's going great. Today it's not. Now we're shrinking. Okay, given the many false dawns, there is every reason to be cautious about predicting when any upturn may occur. And we'll take a look at that. This morning we're going to be joining Ron O'Brien. He is a senior global strategist with Interfoods out of Florida, and he does a wonderful job of providing for us the window of what's going on in the at the CME, and thus impacting what it is dairymen get paid for their milk. We have gone there for quite some time and enjoy listening in on the trades.
Hello, I'm Eva Strang, Education Coordinator for the Allied Milk Producers. Cereal and milk have always been a mainstay for breakfast, at least since 1882. That's when the first commercially manufactured cereal was made by Henry Perky. It was called shredded wheat, and it's still with us today as one of the most popular cereals. Remember, breakfast is probably the most important meal of the day, and a good breakfast includes nutritious dairy foods like milk on cereal. A good way to start the day.
Is your milking equipment holding your dairy back? Are you still milking with 5/8-inch dairy equipment that became popular 35 years ago? Your dairy's production and milking goals have changed. Shouldn't your dairy equipment be able to meet the same goals? Beco Dairy Automation can help with industry-leading, innovative dairy equipment that eliminates all restrictions in the milk path of your milking parlor. Eliminating the restrictions in the milk path improves production, milking flow rates, parlor throughput, and ultimately better udder health for your cows. Beco Dairy Automation is your partner for success, delivering unrestricted, durable, and profitable milking equipment to today's commercial dairy. To learn more, call us today at 1-800-344-7166 or check out our website at www.becoKnows.com.
The conference.
Butter, 14 truckloads of July butter, 13 truckloads of September butter. Is that a lot of volume? For futures morning, it is, but are we going straight down on the line from here in butter? I don't know. It's going to be pretty volatile, that's for sure. Let me get these guys connected in Chicago, and I'll get right back to you. Hold on.
Coming up to the call here. No mark in the block. 148 even offer in the barrel by BJM. First call. Second call. Third. 675 offer in the barrel by BJM. Down a quarter on the day. Barrel. Posting. First call. Second call. Third. 146 and a half offer in the barrel by BJM. No market block still. Posting. First call. Second call. Third, 46 and a quarter offer in the barrel. Down 75. Posting. First call. Second call. Third, 146 even offer in the barrel by BJM.
Putting out lower offer in the barrel.
Posting. First call. Second call. Third, 45.75 offer in the barrel by BJM.
45.75 offer.
Still no mark in the block.
Barrel.
Posting. First call. Second call. Third, 45 and a half offer in the barrel by BJM. Posting. First call. Second call. Third, 45 and a quarter offer in the barrel by BJM. Posting. First call. Second call. Third, 45 even offer in the barrel by BJM. Nick buys at 145 even trade in the barrel.
Okay, there we have the blocks and barrels first thing this morning. Things trading down just slightly, no big changes. Kind of everybody taking a cautious wait-and-see look at things this morning. The news articles, back to the news as we wait here just a few minutes until we come up with dry powder. This article out of New Zealand, analysts, Fonterra's financial performance may be important to New Zealand, but the message from its chair, John Wilson, during today's half-year result was clearly aimed at its owners. Our management is aware of the need for strong performance to ensure that we get every possible cent back into farmers' hands during a very tough year. Fonterra duly delivered, doubling its half-year profit to $409 million, while earnings before interest and tax rose by 3/4 to $665 million. The reason for this is that when milk prices to farmers are low, then Fonterra has low input costs. Yeah, when the number one cost of production is milk, and milk is half or lower, things are going to change. Accordingly, there is more scope for corporate profit. The growth from its consumer and food services operations, which includes higher margin, higher value products like ultra-high temperature and mozzarella, outpaced those from its ingredients or commodity products arm. While farmers rely mainly on milk price payout, heftier profits from Fonterra's consumer products also benefit them too. And Mr. Wilson ensured the 40 cent a share dividend payment would flow through when needed by promising to fast-track the installments and support farmers at a time when cash flows are extremely tight. Certainly, non-farming investors are unlikely to complain about getting paid earlier. Coupled with expected reductions in interest costs due to the Reserve Bank cutting rates earlier this month, farmers should get a bit more breathing space in dealing with their banks. Nevertheless, Federated Farmers National Dairy Chairman Andrew Hogarth pointed out most farmers wanted to see a lift in global dairy prices. Good grief, farmers. We still need a better milk price, and that is largely out of Fonterra's hands. It is largely a global problem. Fonterra would offer little solace in the near term, though it did expect prices to lift later this year. Wrong. Given the many false dawns, there is every reason to be cautious about predicting when any upturn may occur. In the meantime, Mr. Wilson could offer its farmer owners only more of the same. The business will continue to work on capturing demand and margins in the second half of this year, just as it did in the first half, but focusing on our consumer and food service volumes and those of specialty ingredients, and that's certainly going to help the overall company. We can see that. ANZ Bank rural economist Con Williams said Fonterra will still face significant challenges. The big thing for them is probably getting the product mix right to try and maximize earnings. That includes shifting away from whole milk powder into relatively higher value products. Cracking the China market remained the key, including Fonterra developing its relationship with Chinese infant formula marketer Bang Mate. Mr. Williams said. Now that spelling on that is B-E-I-N-G, Bang Mate, M-A-T-E. So, you talk about Bang Mate and infant formula into China and trying to do more of that. That's the larger term play, it says in the article. If they can front load, and that doesn't really matter. Next thing, the red ink has continued, showing that more work still has still to be done. So just a little report on what Fonterra is looking at. Now, why is that significant? Well, Fonterra accounts for a ton of the global market fulfillment around the world. Nobody sells more milk to the global market than does Fonterra. Nobody. Okay, lots and lots and lots of it. And so, in the greater than 55% of all global goes through Fonterra's hands. And so, just a huge player, and they're going to know and benefit most when and if China comes back. But we have to take a look at where China's at, and that's really going to be our cover story this morning. We'll get to that article a little bit later. We'll come back to it after the butter trades at 5 minutes after the hour. But China, the story, China.
Move over, Manny, Mo, and Jack. For quick, convenient auto service and no appointment needed, ask for G Express service from Gorpetti Automotive in Visalia. We'll guarantee an oil and filter change in as little as 39 minutes. And there's more. Need your tires rotated? A brake job? Even a 15,000-mile service? There's no appointment necessary, and we'll guarantee your service time. G Express. It's a new level of convenience you'll only find at Gorpetti Automotive.
Is your milking equipment holding your dairy back? Are you still milking with 5/8-inch dairy equipment that became popular 35 years ago? Your dairy's production and milking goals have changed. Shouldn't your dairy equipment be able to meet the same goals? Beco Dairy Automation can help with industry-leading, innovative dairy equipment that eliminates all restrictions in the milk path of your milking parlor. Eliminating the restrictions in the milk path improves production, milking flow rates, parlor throughput, and ultimately better udder health for your cows. Beco Dairy Automation is your partner for success, delivering unrestricted, durable, and profitable milking equipment to today's commercial dairy. To learn more, call us today at 1-800-344-7166 or check out our website at www.becoKnows.com.
Here comes the powder.
All right, man. We got about a minute till we open here. Settled at 73.75. Sir. 30 seconds till we open. 30 seconds.
As you heard, powder settled at 73.75. Yesterday, up 0.250.
It's been a weird one so far. Just a bunch of random requests and whatnot, but it's been pretty busy, pretty consistent. So no complaints. 10 seconds till we open. All right, coming up on the open here. We're open. 73 even bid on one by Trav. 75 even offer by Abby. Offer 75 where? I can offer two at 75 even. Saw joins and I joined 2 times. 74.75 offer by. Oh wait, sorry, no. So 75 even offer by Ash. We got and BLT. So we got two more on the offer. At 1, 2, 3, 4, 5. Got a total of 7. Yeah, Kippy, Ash, and BLT, and Saw. 2 times. So I got 10 seconds. 10 seconds till the call. 2 at 74 even. 74 even offer. BLT joins the offer. Offered 4 even. Saw joins as well. 4 on the offer. 73.25 bid on one by Trav. KBC joins the offer at 74. 5 on the offer. Good call. Good. I can offer 2 at 73 and a half. Sorry, 73 and a half. Abby sells that one to Trev. Offer 3 and a half. 73 and a half offer by Saw. 72 even bid. PPT. 72 even bid. Yeah. 2 and a half bid on one by Trev. Still 3 offered at 73 and a half. 72.75 bid on one by PPT. Posting. First call. Okay. Second call. Third. We're close. Gonna settle right there at 73.25, down a half. 1 load traded.
Okay, there we go. 1 load traded. Powder down slightly this morning at the Chicago Mercantile Exchange. Thank you to Ron O'Brien and his team in bringing that to us. Back to the news this morning. Saputo, Canada's largest dairy, to shut down 3 plants. The the impact. Canada's kind of they've done what I would really like to see the domestic market in America do, which is separate itself from global a little bit. In my opinion, this is just my opinion, there's no reason dairy producers in America should be penalized and receive only global pricing for milk that is brought into the demand, brought into to fill demand in the domestic market of the United States. There's been no decline in the domestic market here in the United States. If anything, we've improved a little bit. Pricing alone is going to impact the amount of dairy consumed in the United States. Price alone, $2.74 a gallon for milk. Ice cream is going to come down. Cheese under blocks and barrels. Cheese was down under $10 for a 2-pound block of Tillamook cheese in the store yesterday. And so those lower prices have a huge impact on the amount of consumption of cheese, butter, and milk here in the United States. Well, the problem is that dairy producers in the United States are being paid global pricing, below cost of production, and a large majority, probably this year in the 92 to 95 percentile of all milk production in the United States is going into domestic consumption. And so, holy cow, why should we be receiving the global price? And of course, somebody's making some big bucks on that. We're down $14 billion or more in total revenues to a dairy producer here in the United States, $14 billion lower in 15 than in 14, that didn't get into the hands of the dairy producers, and thus $100 billion didn't get into the farm stream, that's everybody downstream from a dairy producer. And domestic demand for that milk did not change. Did not change. And so there's little reason, there's little or no reason for that to exist. But Canada, interesting, and I don't, they have their own way of doing things and do a fairly good job of seeing to it that dairy producers are not going through the volatility, the cyclic volatility that dairy producers are going through here in the United States and other parts of the country. So, Montreal, this article, Saputo Incorporated says it will close 3 plants in Eastern and Atlantic Canada, employing some 230 workers by the end of next year in a move to cut costs and boost efficiency. The Montreal-based dairy processor and cheesemaker said its plant in Sydney, Nova Scotia, will close in June, followed by another in Princeville, Queensland, and I guess Quebec, in August. What am I thinking? I'm thinking Australia all the time. Princeville, Quebec, in August. A third facility in Ottawa will close in December. Saputo owns numerous dairy brands, including Dairyland, Nielsen, and Vachon. It owns a number of other food brands, including the Canadian rights to Hostess products. I'll be darned. Production at the 3 closed facilities will be diverted to other Saputo facilities. The move announced Tuesday is expected to save $9 million annually by fiscal year 2019. Meanwhile, Saputo plans to invest about $32 million in other locations over the next 2 years. Saputo is the largest cheese manufacturer in Canada and one of the top 10 dairy processors in the world. Okay, so things they are changing. There's no doubt that as time goes on, greater and greater efficiency will be sought at every sector of the dairy industry, even in the processing. Let's see if there's anything. Current situation is extreme for both Arla and everybody else in the global. We haven't talked about Arla very much, and this out of the Agriland. Arla UK cuts its milk price for April supplies. Okay, Arla Foods has cut its on-account milk price for April by 0.75 pence per liter, the equivalent of 94 cents per liter when converted to euros. The price reduction will come into effect from April 1st. According to Arla, April also sees a new quarter's January through March average exchange rate being introduced to the pricing mechanism. This has a 0.19 pence per liter negative impact on the milk price. Everything. Perfect storm down. Arla said that this latest reduction, coupled with the impact of exchange rates, reduces the UK standard liter price for conventional milk down to 0.94 pence, taking it to 20.87 pence per liter, or 26.41. We're going to come up to butter. They're a little early.
As dairy farmers watch profits slip away and a wonderful way of life painfully comes to an end for future generations, Dairy Pricing Association sees a brighter future simply by having a solution. These dairy pricing farmer members in 10 states and growing have figured out a way. Government handouts are not the answer. It's time for farmers to take matters in their own hands. Dairy Pricing Association is asking for farmers to contribute 10 cents per hundredweight to buy surplus dairy products to create a floor price, as well as helping relieve hunger in America. This is a win-win. As dairy farmers, we watch markets fluctuate as much as $4 per hundredweight in 1 month's time. 10 cents is nothing. Imagine being able to curb another 2009 scenario simply by controlling the floor price that you need as a dairy farmer to stay in business. With the dairy products that you as a dairy pricing member purchase, thousands of people are fed. No government assistance is needed. Rather, simply you as a dairy farmer are helping yourself by helping others. For more information, visit online dairypricing.org.
Are you restricting the profitability of your dairy herd? Beco Dairy Automation can help with industry-leading, innovative dairy equipment that eliminates all restrictions in the milk path of your milking parlor. Beco Dairy Automation is your partner for success, delivering unrestricted, durable, and profitable milking equipment to today's commercial dairy. To learn more, call us today at 1-800-344-7166. Check our website at becoKnows.com.
I was looking for a conversion so I could get that a little more relative. Here's the butter trades.
Here, actually speak to me. Oh my God. Good. 30 seconds till we open.
Getting back to our Arla. Arla Foods is a global dairy company owned by 12,700 dairy farmers in the EU with circa 20.
He offers one at 195.75 right out of the gate. Steady offer by T. No bids.
You are listening to the Agribusiness Dairyman News Hour magazine, your 1-hour all-dairy connection, Wednesday morning, the 23rd of March, 2016. Stay tuned for the butter trading at the Chicago Mercantile Exchange. We'll be back at the close of butter.
All right, minute in here. Just a 195.75 offer by T, no bids.
DPC.
Still 2 offered at 575. 10 seconds to the fire. 193 even bid by GTL. 195.75 offer 2 times. 1T. 1 Ash. And up to the call here. 9.5 offer by Ash. 5.5. T offers 1 at 95 and a quarter. Posting. First call. Second call. 95 even offer by Trav. 94.75 offer by T. 93 even bid by GTL. Posting. First call. Second call. Third. 4.5 offer by Trav. Down $1 and a quarter. 194 and a quarter offer by T. Down $1.50 here. Posting. First call. Second call. 4 even offer by Trav. Still 93 even bid. 375 offer by T. 3 even bid by GTL. Posting. Trav sells at 193 even and GTL 193 trade. 92 even bid on 1 by GTL. Still 93.75 offer by T. She's still offering at 375. 92 even bid by GTL. Posting. First call. Second call. Third. Trev sells that at 92 even at GTL. 192 even trade. 193 even offer by T. 192 even is last. Now 375. Volume is 2 all day. No bid here. We got a 93 even offer. Posting. First call. Second call. Third. 275 offer. 191.75 offer by T. 191 even. Or 10 buys 1 at 191.75 from T. 191 even bid on 1 by GTL. KBC is first. 2 loads bid at 191. 92 even bid on 1 by Evie. Posting. First call. T sells 1 at 192 even. So 91 even bid by KPC. 92 even bid again here by Evie. Trev sells it. 91 even bid on 1 by GTL and KBC. 92 even bid on 1 by Evie. Posting. First call. He sells that at 92 even Evie. 91 even bid on 1 by GTL and KBC. 92 even bid on 1 by Evie. Line is 6 all day here. 375. Posting. First call. Second call. Third. Close. All right, so we're going to sell it right there. 192 even, down 375. 6 loads traded total.
Okay, Stuart, a nice break there at the end of the butter trades. 6 loads sold, butter down 2-3 cents a pound, 193 off of 195 or higher yesterday. But of course, all of that fueled by the unbelievably high inventory numbers that are currently part of the reality that is the dairy industry. Too much milk coming into the system, they're turning it into butter powder and blocks and barrel cheese. Inventories rise, prices fall to dairy producers. So a little bit more of the same, unfortunately. Our thanks to Ron O'Brien and his group and the excellent job they do every day to afford us this window of opportunity to keep track of the blocks and barrel trades at the Chicago Mercantile Exchange powder butter as well. So there we have the markets this morning and how they're connected to you and why we cover them. A daily dose of markets is what we promised, and we make sure that we do that. Having a little trouble on this China issue. That's an article in the Wall Street Journal entitled China Used to Be a Land of Milk and Honey. I think it would be a great article to cover. I am not able to access it for companies. For dairy companies, China used to be a land of milk and honey. Now there is too little demand and too much supply problems that may keep weighing on China. And then here's this Manguineu Dairy, and I wished I knew how to pronounce that. I'll have to hear somebody say it once to help me. But anyway, I am not able to get that article to come up in full form this morning. I will work on that, and it's something we'll have to cover on another day, but we'll make sure that we get that done. We would like to hear everything we possibly can on China. I think it helps us. I think that China is a very wise steward of its resources. I like what I see relative to their willingness to do a better job of taking care of their people. This two-child, more than one-child policy is an easing. There's, obviously there's a westernization slightly of things in China. Chinese people don't consume much milk. They tend to be, as I've been informed, to be lactose intolerant, believe it or not. So E2 milk instead of E1 might be the answer to that long term. But dairy in China is on their long term radar to resolve, to make better, to do a better job of meeting demand. They're going to have to work hard to overcome the melamine issues and the infant formula woes that they went through the last 24 to 36 months. Quality continues to be, a big issue. And so, black market went crazy for infant formula that was not Chinese. Anything. Give us the infant formula. They care a great deal as a people about their families, their children. We're going to see a dramatic increase in population in China over time, but I think China is gearing for that. They're learning the dairy business. It won't happen overnight, but they have the bucks to come looking for the assistance that they need. And if they keep that long-term mentality, then I think that this is a country that is thousands of years old. And I think they look at everything long-term. When you got to feed 1 billion people or more, guess what? You have to think long-term. You're not going to be able to turn that ship very quickly. But you can turn things, and you can make a difference. And I think we're seeing that. How that will impact us? Well, the reality is they don't have to pay sustainable prices for milk and milk products. Now, when I say sustainable, that's relative to the cost of producing it by the dairy producer. The whole industry relegates you guys to insignificance. They'd rather see you go out of business than pay you a decent price. You're the one that takes it in the shorts every time, all the time. They would rather see you go out of business than pay you a sustainable price. The market is like that. It's brutal. And it is controlled by supply and demand. Supply that you're non-responsive to, demand that you can't control. And so consequently, dairy producers take the hit. And so the cover story about this issue with China is that they're not coming back. And they're certainly not coming back at full price. They don't have to right now. Now, as you take control of your supply chain, as you throttle back on the milk production, you can force the market to pay you a better price. And China will have to pay more for their butter, powder, and cheese. Powder in particular. But only if dairy producers want to take control. OPEC taught you. The supply of oil has control over price, up or down. The supply of oil has control. The suppliers of oil. Who would have ever thought they could drive the price of oil under $30 a barrel simply by leaving the spout open. We never thought they would take that kind of a hit. Well, guess what? They made their point, didn't they? And we hope it's not wasted on dairy producers to realize that supply can control price. And you can, I don't want to say manipulate the market, but you certainly can be a player in the market, for crying out. Could you at least be a player instead of the doormat? Because nobody wants to pay you a sustainable price. They're not going to if you let them get away with it. And they'd rather see you go out of business than pay you a sustainable price. That's obvious. Even your processor, even your cooperative, the CME is the recommended lowest price. It doesn't have to be the lowest price. But they're going to take it down where the CME allows them to take it, and you're the one that's the loser. You see how that works? It's going to go to $9. If you let it go to $9, it will go to $9 again. And it won't go over $14 or $16 again if you allow that to be the conditions under which you will produce milk. And China will let you stay there. Your processor will let you stay there. Your cooperative will let you stay there at under 16 and even lower, down to 9. If you, as a producer sector, choose to stay there. And every indication over the last at least 12 years that I've been tracking it very closely, every indication is you're just dumb as a bag of hammers in your response to supply versus profitable demand. Never one time in all of these cycles have dairy producers willingly, with purpose, with conviction, with some sort of synergy and unity, have you reduced the supply of milk into this market relative to profitable demand for that milk in this market or any of the markets we've seen over the last 12 years. And I am very convinced that if we could track it for 40 years, and the numbers are out there, if somebody wants to put the time into the research. But that takes time and money. But everyone knows you're going to chase price with production. Everyone knows you're going to chase it up or down. You're going to chase price with production. It's just what you do, and it's the death knell. It's the dumbest thing I've ever seen. Because you forfeit to them total control over your future. And thousands of producers and thousands of vendors have, lie in the path of that complete death march. And that's what's going to happen. We're on a death march, and more and more and more and more producers. And the thing about that is that there are still producers and others out there that feel, well, let's just take it down another notch. The fewer producers, the better. No, guess what? You're down 80,000, you're down 150,000, you're down 400,000 producers. And you're still getting paid a price for your milk below the cost of production. One thing has nothing to do with the other, the number of producers. You've chased efficiency and done a great job of it. More milk per cow per day than ever before. Higher quality. The best milk in the world. Not just the country, the world. The best milk in the world. But there's just too much of it. And so the plan that we've offered, the opportunity that avails itself to you, is to take advantage of following the dairy pricing model, follow the 2020 agenda, work on your domestic consumption and utilization, because you can fix in a large measure all of your financial woes by doing a better job of seeing to it that every American, everybody in America has a choice, an opportunity to have dairy with every meal. You also have a tremendous opportunity to properly fortify milk to the way it was given to us by the cow, so that you can provide to your consumers and every consumer who makes a choice to buy that product the best tasting and the most nutritious milk available in the industry today. Nationwide, Not just here, not just there, but everywhere. So, what's the plan? The plan is to unify. The plan is to fortify milk nationwide. Why? To increase utilization, to increase the taste and nutrition of the product that you provide to the consumers of this country. Why? Because better taste and more nutrition will lead to larger consumption rates. Plain, pure, and simple. Then you've got to start working together in a collaboration with processors, manufacturers, your co-ops, the retailers, all of you, to help solve the problem that way too many Americans, 20 to 25% of all Americans, do not have the opportunity to choose some dairy, any dairy, for their breakfast this morning, or lunch this afternoon, or dinner tonight, much less a snack this evening, which might include a bowl of ice cream or some yogurt or some pudding of some sort, which involves the use of dairy products. The most nutritious, very efficient product that is dairy for the consumption in behalf of our children, our young adults, and even our elderly. Dairy does a body good, and everybody should be able to choose for themselves whether or not they get to have some, that they can include it with their meal every day. And so this collaborative effort, everybody helps feed the hungry in this country. We can do this. There doesn't need to be hunger in America. Not in America. Not when you've got all that cheese and powder and butter sitting in inventory there that's killing you in the first place. The low cost of production, you're spending billions of dollars. $14 billion last year you spent to have yourself in the toilet by making more milk. Now that's what you gave up. You didn't spend. I don't know how much you spent. That would be an interesting number too. What it cost you to make the 6% too much milk you had last year, because that's where you were. You were about 6 to 8% overboard, and that cost something. It wasn't just what you didn't get paid, which we know was $14 billion compared to 14. $100 billion in total economic impact in the farm sector of this country, $20 billion of that in California alone. But you paid for the privilege. You paid tens of thousands and even millions of dollars for the privilege of overproducing a product you cannot sell for a profit. So the 6% too much that you shouldn't have made and paid for the privilege to make it depressed the price on all milk, the other 94% of all domestic production for domestic consumption. You took that in the shorts as well. You took a less price. And so your buyers, they're all smarter. They're all smarter than that. China, Mexico, everybody's got to be loving this. And with oil prices down for your number one buyers in Mexico, in Russia, you think Russia's happy about the low price of oil? Putin, he's just dumb as a post too. Doing what he's doing to his people, creating the havoc he's creating. And of course, then he has to put up with the oil price. And so he's got less money. Russia makes oil, produces oil. They sell it. Mexico, Venezuela, Central America, South America, Europe, everybody's got some oil, and when it's down under $30 or $35 a barrel, everybody's taking it in the shorts. Everybody's got fewer dollars to buy the things they need, including food, from the producers who make it here in America and all over the world. So everybody suffers. Supply's got the control. OPEC teaches, if you're willing to learn, listen, and pay attention. Well, that's our cover story this morning, is that there is another way. www.my-dairyman.com. Go to dairyproducer.org. Read the 2020 agenda. Follow along. Understand why there's got to be organization of dairy producers working together for greater synergy to implement a better plan. Then you pursue the increase of utilization and consumption domestic, which we propose is as high as 30% more milk and milk consumption could be squeezed out of the domestic market here in America if we simply just get on with it. Well, thank you for joining us this morning. This has been the Agribusiness Dairyman News Hour magazine, your 1 hour all dairy connection. The 23rd of March, 2016. We'll be back on Thursday morning, the 24th. We're going to go out and knock on some doors and visit with dairy producers today and clients. It's what we do. We have a message to share, and we're going to continue to pursue this effort. Why? Because it's just the smartest thing we can do. We got to be smarter than the problem, and we've long advocated that we can be. But it's going to take a collaboration, gentlemen and ladies. If you're tired of paying bills with no money, then let's stop putting so much milk in the tank so we can have more money in the bank. It works. Supply and demand is in play, and we cannot, should not, better not fight it, because it's going to take you out of the business eventually. Everyone have a safe day, and goodbye.
Imagine life without cheese. Okay, it's a horrible thought, but we're only pretending. Pasty pizzas, blah burritos, colorless casseroles, the mind boggles. Cheese transforms the eating experience. It can be creamy or crumbly, sharp or sweet, hot and gooey, or room temperature. With hundreds and hundreds of different varieties, cheese can really add zing to your meals. Behold the power of cheese, presented by the Allied Milk Producers.
Pico Dairy Automation is your partner for success, delivering unrestricted, durable, and profitable milking equipment to today's commercial dairy. To learn more, call us at 1-800-344-7166.
To learn or hear more, please join us for our daily News Hour magazine, your 1 hour all dairy connection. It is broadcast live every morning at 8:30 a.m. Pacific and 11:30 a.m. Eastern. You can join the broadcast by calling 712-432-0900. Your conference PIN number is 666632#, or you can listen to the recorded call by dialing 712-432-0990, using your same PIN number for personal access. Find us on Facebook, Twitter, and on YouTube. We truly believe you need to and can know more. Our job is to deliver more knowledge to dairy producers, believing that if knowledge is power, then applied knowledge is nuclear power. We'll see you on the call.